Good afternoon, everyone. I am going to call the Management Committee meeting to order. And we have a quorum, so let's get started. As our practice, we will be reading the Dakota Land, Water, and People Acknowledgement Statement quarterly, and that's not due for another month yet, but it is part of our agenda, and just call that out so that people can read it and acknowledge it if they want. So thank you very much for that. We'll move on to our agenda, and we've got our approval of the agenda. We don't need a motion on this, but are there any additions, changes, exceptions to the agenda? All right, seeing none, that is approved. And then we've gotten in advance the approval of the draft May 14th, 2025 Management Committee meeting minutes. Everybody's had a chance to review those. Thank you, Lori, for getting those ready for us. Are there any changes, edits? Seeing none, then a motion to approve would be in order. Is there a motion?
So moved.
Moved by Austin, is there a second?
Second.
Seconded by Pacheco. Any further discussion? Seeing none, all those in favor say aye.
Aye.
And those opposed, no. And that passes unanimously. We've got one item today on our non-consent business. It is from the report of standing committees. And this is actually going to be a same week item that'll be going to council today. So with that, I'm going to hand it off to Jody Jansen, Senior Project Admin at MTS, and Paul Colton, Fleet Manager, MTS Contracting Services. Did I get that right? I'm just reading from my statement. Okay, good. Welcome. Really glad to have you here today. So
You're doing great.
Thank you. I try. So I'll turn it over to you, and we'll kick off it's a joint powers cooperative agreement 2511057 with the state of North Dakota. So I'll turn it over to you. Thank you.
Thank you so much, Chair, members. I'm Paul Colton. I'm the fleet manager with MTS, and we have the following proposed action item for you this afternoon: that the Metropolitan Council authorize its regional administrator to negotiate and execute joint powers cooperative agreement 25I-057 with the state of North Dakota to allow for the purchase of 5 Diverge Ford Transit vans for Southwest Transit Prime service. These will be replacement vehicles. So we began working on this with the state of North Dakota in January. We needed an avenue to purchase the vans on a contract that met our requirements. State of North Dakota had this contract with North Central Bus, and per state statute, we need to have we're allowed to enter into a joint cooperative agreement. We were able to come to terms with the state of North Dakota earlier this month and work through all of that. So we're required to do that and bring this forward to you for approval. With that, I'd be glad to answer any questions.
Great, thank you. I think Transportation's got the item that was out the 5 units, which is on consent today, so that's good. Are there any questions about this agreement? All right, then, seeing none, I would entertain a motion to approve.
So moved.
Second.
Been moved by Lilligren, seconded by Barber. Any further discussion? I would just say this is great, so thank you very much for working on that. We appreciate it. We love these joint powers agreements, and they've served us well in the past by no means, so thank you for that. All right, then, nothing else? All those in favor say aye.
Aye.
And those opposed, no, and that passes unanimously, so thank you very much.
Thank you.
And we'll be making that report then again at the council meeting today. All right, now we've got a few information items for today. And the first is our quarterly investment review advisory committee report. And we're bringing back Mark Thompson, our Director of Treasury. Good to see you, Mark.
Thank you, Madam Chair, committee members. Yeah, Mark Thompson, I'm the Treasury Director, and this is an information item that comes quarterly to this committee. It's information on our investment portfolios. It was discussed yesterday at our investment review advisory committee. I'm going to, there's 9 slides, so tell me if I get a little long. And
all right, well, you've got a little bit of time here. I'll start to, hold up the sign, Councilmember Pacheco.
I just want to point out, Mark has finally learned to be number 1
Yes. That's strategery.
Well, there's benefits to being last too, I guess, but I don't know. No, thank you. I've got 9 slides, so hopefully we are just fine on time. As I said yesterday to the investment review committee, there's really nothing exciting going on in the last 3 months, right? So we'll talk about what it all means. You'll probably hear me say tariffs a few times, but so economic growth for the quarter was negative. Now this was the first time in 3 years we've seen negative growth. It's a little skewed and a little deceptive, and I'll show you why in a second, but it was really caused by one thing that had nothing to do with our domestic production, which is what GDP measures. But so negative, you can see these are the last 6 quarters of GDP. First quarter was obviously quite different, had a negative 0.3% growth. And diving into the next slide, we'll dive into show you a little more detail. You can see the blue bars are different components of the GDP. And it's clear that imports were a big negative, and you can see that, we saw an increase in consumer spending, we had an increase in investments, and a small decrease in government, a small increase in exports, and then a big drop in imports, and that was primarily businesses front-running tariffs. Businesses were purchasing goods from overseas. To get ahead of tariffs, and this is keep in mind this is first quarter, before the April 2nd announcement of global tariffs, but businesses were front running those tariffs, and that caused a big negative. Imports are counted against GDP as a negative. GDP is meant to measure, domestic production, so that's an offset, and conversely, or flip side to that number. Companies now have very large inventories, which they're going to have to sell. So we could see kind of a reversal of this in the next quarter or two, as maybe we don't expect imports to do this again. We'll probably see companies trying to sell off what they've purchased ahead of tariffs. So kind of an interesting quarter that way, and we'll have to kind of see how that works its way out in the next few quarters. Next, I'm going to touch on inflation. There's been high expectations that inflation was coming with the tariffs, but we haven't seen it in the data as of yet. This shows CPI, which is a measurement of inflation over the past year or so. You can see in the far right that inflation is still quite low. It came in at 2.4% for the quarter. And since this graph, we also received April's inflation number at 2.3%, so it went even lower. So we haven't, like I said, quite seen what people were expecting as far as inflation goes. I think inflation expectations are certainly still there. Consumers are still scared, and there's still a lot of fear in the markets around inflation. It's really the inflation expectations are just getting pushed forward. So they're still there, and it's still affecting the markets, but we just haven't seen it. A lot of times fear will front run the actual data. So we'll have to see again whether we're gonna get inflation in the next couple of quarters or not. But it all depends on the tariffs, right? I'll just a little bit more detail on that. Energy fell 2.4% in March, really headlined by a 6.3% drop in gas. Prices that increased were food, personal care, medical care, education, apparel, and new vehicles. So there are some price increases out there. Other prices that went down include airline fares, motor vehicle insurance, used cars, and recreation. Also mentioned, I know I've often showed the Fed has a favorite inflation measure called core personal consumption expenditure. It's another index, and that came in at 2.6% for the quarter, which was a four-year low, believe it or not. So still waiting for the inflation to come through from the tariffs. And that's all I'll say about that. Labor market, still not seeing, the federal layoffs that we expected aren't coming through because Some of them are still being paid and some were reinstated. There's a lot of different reasons, I believe. And the March non-farm payrolls report is what's shown here on the left. That's jobs added to the economy. January and February were quite low. March showed a good number, 243,000 jobs were added in March. This news was really kind of shrugged off by the markets because the markets were so focused on tariffs and the crazy trading and chaotic trading that's been going on. You know, so being this didn't have a lot of bad news, it was just kind of overlooked, but that said, you know, it's a strong number in March, but there are some cracks. In the labor market, we're seeing lower hiring, higher quit rates, our average weekly hours are dropping a little bit. Wage growth is slowing down, so there are some signs that the labor market's gonna slow. But it's like you said, the first quarter was pretty volatile. We had 2 bad months and then 1 good month, so. We may see, with these cracks in the market, we may see some pressure on the unemployment rate. You can see in the upper right.
Mark, just one
Yeah.
quick pause. Councilmember
Oh, sorry.
Barber.
Thank you, Madam Chair. Just a quick question and just maybe confirm or what I've heard, but a lot of the federal workforce that was let go either through eliminating probationary periods or reductions in force, a lot of those people are being paid through the end of May. And so we won't really see, like they're not reporting those statistics as jobs lost yet. And so it's a pretty large percentage. And so, and there's anticipation that there'll be a further reduction in force in early June, so.
Interesting.
I agree, yeah.
It's a mess.
So, thank you, Madam Chair. I think, I was just gonna say the employment rate, as you can see in the upper right, has been pretty steady for the last 9 months or so. Finished the quarter at 4.2%. But with the other things that are maybe coming and some of the cracks we're seeing, there could be some upward pressure on the unemployment rate. Treasury market, this one is more interesting to me than others, but maybe not to you. It's you know, so the domestic economy is still relatively strong. You know, we've got a lot of fear and uncertainty, of course. And you know, the tariffs are getting all the attention in the first quarter. You know, I'll touch on lately too, but you know, the markets were wild. I'll show you the equity market in a minute, and this is the Treasury market. So this slide shows how yields in the Treasury market changed from the end of the year is the dotted line, and the solid blue line is the end of the first quarter. You can see rates drop dramatically throughout most of the curve, except for the very short-term rates, which, you know, the Fed is really on pause, and they were cutting rates last year. They haven't cut rates at their meetings this year in January, March, and May. They're really in a tough spot because they're, you know, on one hand, if inflation kicks up, that means they should be raising rates. And if we go into a recession, our growth slows way down, they should be cutting rates. So they're really kind of in this dilemma about which way things are gonna go. And they're kind of in a wait and see mode. And they've even come out and said they're in no hurry to cut rates. So we kind of expectations for the next cut have really dropped. Right now, most economists are saying 0 or 1 rate cut this year. So just kind of, they're in a wait mode just like everybody else on a lot of things right now. But so they've held that, you can see in the chart, they've held their lending rate at 4.25 to 4.5. And that's where short-term rates are staying. And that's, you know, that's where we're investing our short-term portfolio. And I'll show you that in a minute, but are pretty steady. Although, you know, some of our portfolio was invested last year at higher rates, and now we're seeing that work through our short-term portfolio to this lower level. But generally, rates didn't change much on the very short end. Our longer-term portfolio is invested more in that 5-year area, and you can see the rates drop dramatically there during the quarter. I will say that that was the first quarter, and rates have been jumping up and down all the time. And reacting to news around tariffs and and inflation and things like that, and as you know, Moody's downgraded the U.S. debt credit rating in May 16th. So
they've got 3 strikes now, right? Wasn't that the last one?
yes, yep. So it wasn't unexpected. You know, Moody's put the U.S. credit rating, gave it a negative outlook about a year ago, and so that's usually a signal that something's coming, a change is coming. So, you know, it wasn't unexpected in the markets that much, but and Fitch did it already, and so did S&P. S&P actually lowered the credit rating in 2011, and it's a long time ago. Fitch just did it in 23. So Moody's is kind of the last credit agency to lower the debt rating. So what I was getting to, and you know, Moody's came out and actually just blamed successive administrations and Congress for not handling it. They referenced increasing debt costs, and it's interesting timing that they put this announcement out right when Congress was going through a tax and spending bill. So you've probably seen it in the news, and it's interesting that their timing is interesting to me. But what happened was we saw yields completely flipped. So if you're looking at this chart, you say, oh, yields went down in the first quarter. Well, now it's May, and after the Moody's announcement, yields have gone up dramatically. Like, you're seeing that 20 and 30-year bonds on this chart at the end of March were at 460. They're now 5%. So this chart is completely different if you look today. The 10-year's up. You know, I can't read it from here, but it's showing what 420 on the 10-year there. Now it's 445. So I mean, rates have gone up dramatically. So investing in our long-term portfolio has been a little tricky because one day, you know, yields are really low. The next day they're really high. So kind of picking and choosing on which days we make new investments. The equity market, as you know, was not good the first quarter. First quarter was down. The S&P 500 was down 4.59, and you can see the chart there kind of references one of the tariff dates on April 2nd, but the market was going down before that, and then that only exacerbated the fears about recession and trade wars and the chaos that was going on. You know, like I said before, the investors and traders and consumers are all on edge about where things are going. I'm just gonna check my notes here with my blind eyes, but. So yeah, we saw the, you know, after the April 2nd tariff announcement, you know, the fears only got worse about inflation and recession. That's what was really going on in March, and then in April it got worse. Consumer sentiment has really dive bombed too. We actually saw a flight kind of away from the markets in general. The US dollar fell. People were buying things like Bitcoin, which was up 13% for the quarter, and gold was up 6%. So there was a lot of fear, and fear of being in the bond market or the stock market. Good news, I guess, is that the market's recovered. You can see that on the right side of this chart. The stocks came back, at least to the April 2nd announcement level. Today they're at 5,900, so they're even a little higher. So I think hopefully, you know, the tariff picture and you know, possible outcomes of all that will get clearer and clearer in the next few quarters, maybe, because markets like predictability, and this is just, it's been a chaotic time. And you know, the equity market affects our OPEB portfolio, and I'll show you that in a moment too.
And Mark, just a quick question if I may.
Yep.
So for those that are tariff averse, everyone is, right? So they, and they're manufacturing somewhere that's got huge tariffs or negotiated down tariffs or will see tariffs or whatever. what my understanding is a very not knowledgeable person, but my understanding is a lot of them are just going to other countries. And I think we've got an expert in med tech over here that are just, trying to manufacture elsewhere around the world and not necessarily bringing it back home. So as months move on and we start to really see how those markets are shifting, that's gotta play into this kind of thing, right? Would you think, or am I making it a wrong assumption there?
No, Madam Chair, I think you're right. I think there's a lot of ways this could go, and the tariffs are only put on what's coming into this country, right? Which is a lot of times bits and pieces of what the end product is, or just the wholesale level. But I think the supply chains are totally changing. Some companies are trying to move more facilities here. You hear about that in the news occasionally. Some companies are avoiding us altogether, trying to do things overseas. I don't know if that's what Councilman Barber has seen,
Yes, Councilmember Barber.
but yeah,
Just live in
so,
it.
I'm sorry?
I'd say all of the above. I mean, like,
Yeah.
if you have a component that goes into a medical device that we sell for $1,000 that maybe, is $100 here, and you used to get it for $10 from China, now you still get it for $25 from China, you're still gonna order it from China, so that's happening. You're seeing, I would say, especially in startups, there's a movement of anywhere but the USA, and where they're trying to move everything. Like if you are going out to raise equity for any of these startup companies, if you do not have that strategy, you're not gonna get funding.
Interesting.
So it's a little, I would say some finished good assembly is likely to move here, but you're still getting a lot of the parts from overseas.
Every country's different, and tariffs are changing every day,
And it depends, like,
China's the big one
yeah.
that everybody talks about. It is a big one.
you order it and it can be one thing one day, and when
Yeah.
it comes in, it can be something totally different, and so you just hope you catch the right window.
Sounds fun. Yeah. Right. Thank you for that.
How am I doing?
Good.
Uh,
The presenters behind you are watching closely. I'm noticing here after you,
Shanti's.
there's 31 slides into presentations combined behind you, so,
Oh,
well, you're
okay.
good.
So I'll kind of walk through the three portfolios quickly. This is the short term. There's nothing real exciting here to tell you, otherwise it's pretty much the same as last quarter. The left side shows the allocation, and you can see the colored bars have stayed pretty much the same as far as our allocation to T-bills, discount notes, and money markets. And you see the numbers there. We're just really moving money around based on yield of those different securities, and it's pretty much the same. And the total return on the right, we did outperform our benchmark, virtually the same as our benchmark. I mentioned earlier the average yield is declining slightly. It went to a 429 in the first quarter compared to a 460 in the fourth. Again, that's just we're realizing some of the rate cuts that happened in December, that are rolling off, and we're having to reinvest those at lower rates. But short-term rates this first quarter have kind of held in that 420, 430 area. So not terrible, but it has come down. Interest income's come down a little bit to 15.3 million for the quarter compared to 17.1 for the last quarter. I think, if the Fed doesn't lower rates anymore, we'll stay in the same area. But no real change to that portfolio. The long-term portfolio, the allocation again is on the left with the colored bars. No real change there again. It's pretty steady. We don't have a lot of turnover in this portfolio. It's invested in 6 different securities, as you can see in the bullet points, but it's missing the mortgage backs that we hold, which is less than 100,000, so I didn't put it on here, but generally the same. The total return, we underperformed our benchmark. In total return, we're not a total return investor, so I don't pay a lot of attention to that. The most important thing is that our book yield is increasing. That means that kind of our average yield in our portfolio is going up. As things roll off and we're investing into a little higher environment than we purchased those at years ago. And so 262 is our average book yield in the first quarter compared to 248. And so our income is going up slightly to 3.2 million this quarter versus 2.9 the quarter before. Expect this to continue as the portfolio rolls over into better yielding bonds. Duration, we're quite a bit shorter than our benchmark. So in terms of our per total return, that when yields go down, we underperform. When yields go up, we outperform. So it just has to do with where we are in the investment curve and price movements. So I think we're in good shape here. We just are continually trying to reinvest in increase the yield in the portfolio. For instance, this quarter we invested 35 million. The first quarter we did, and we've done some more since. We're able to grab some yields closer to 5%. On those days where the yields flip higher, like I was talking about earlier, take advantage of the volatility and when rates are as high as we can grab them. And then last, I'll touch on the OPEB trust. This trust didn't have a good quarter. Basically because it's got exposure to the equity market, so it was down 2.04 for the quarter. You can see our historical averages of 5 years and 10 years are still very strong. And this has still been a great performer for us. Don't have many negative quarters, but unfortunately we did this quarter. We've got 62% allocated to the equity fund. It's still managed over at the state board, and the fixed income portion is invested in agency and treasury bonds. And we had positive performance, 1.97% in the equity bucket and 1.12 in the cash. So it was really the equity piece of it that hurt us. Again, we've recovered a good deal of that. And our OPEB liability is still fully funded at this point. And that's all I have. If there's any questions, I'm happy to answer any more questions.
Thank you. Are there any questions? All right. Well, thank you, Mark. Seeing no other questions, we appreciate you being here and giving us this update, and can't wait for the next one. See what in the world will happen. It's almost like it's almost like a Netflix series waiting to see what's coming back next season.
We'll see.
What's
Up
next,
and down. Yeah.
right? Okay, cool.
Thank you,
Well,
Madam Chair.
thank you so much for being with us today. So now we've got, the next item is our June Federal Transit Administration Semi-Annual Disadvantaged Business Enterprise DVE report. We've got with us Ashante Payne. Thank you for joining us today, Ashante. Great to see you, and look forward to your report today.
Thank you. Good afternoon, Madam Chair, Council, and committee members. Ashante Payne, Assistant Director, Office of Equity and Equal Opportunity, and I'm here to present our first half of federal fiscal year FTA DBE semi-annual report. Just as a review, this is all federal funds that we report on and receive through the Federal Transit Administration by U.S. Department of Transportation. It includes projects relative to construction, architectural, engineering, and professional technical services. We set a annual goal, or on a triennial basis. This is often referred to as our triennial goal. And our current goal for 2024, federal fiscal years 2024 through 2026 is 13.4%. Office of Equity and Equal Opportunity staff assign project-specific goals, and with the outcome expected to cumulatively meet or exceed our established goal. And we report both on commitments and payments in our federal report. However, what we are measured on by the feds is our commitments of awarded contracts, and if we do not reach that goal, we are required to conduct a shortfall analysis. So, good news is that we met or exceeded for the first half our 13.4% goal, and we are at 26.9% overall. What I would point out on this slide stands out as significant is those three prime contracts that were direct awards to DBEs at 11.2%. That's the highest I've seen it in any reporting period. That makes a big difference towards the achievement and overall outcomes. I would also say that this is reverse of what we've seen the previous 2 years, where we had shortfalls in the first half and we were able to scramble in the second half and make it up and actually achieve our goal. So we have a different challenge ahead of us in making sure that we don't fall below in the second half and are still able to achieve our goal. This next slide just points out kind of the distribution along gender and racial categories. Again, one thing I would note, back in 2020, we noted a gap in terms of, there were disparities in terms of the awards of contracts across gender and racial categories. Specifically, we had in some cases $0 awarded to Hispanic American women and Black American women. We identified that gap and we engaged in specific activities to address that gap, and we were able to measure our success and outcomes relative to those activities. And I am pleased to report that we have equitable distribution across categories. What I would also say, this is probably, not probably the first time where we have two racial categories that outperformed Caucasian women. That would be Asian Pacific Americans and Hispanic Americans, both topped Caucasian women. In terms of contracts awarded, Black Americans were awarded 10 contracts. That was the most. However, they ranked towards the bottom in terms of dollar value. This chart just shows, in terms of our DBE directory, where the firms are, and then how that correlated to the award of contracts. Again, the two highest in terms of number of contracts, Black Americans and Caucasian women, 10 and 9 respectively. These are some of the major contracts awarded that contributed to this report. What I would really note on this is the number 2 on this list is the MBTA. That's part of our subrecipients. Some of the dollars that we receive that we pass on to subrecipients and contractors. That is included in our numbers and our reports, and we are responsible for those outcomes relative to those dollars. The other thing I would point out that is significant and different from the couple previous years, we did not have any large contracts that did not have DBE participation. So again, it shows in our results and outcomes. Some of the specific success stories I already covered. We had the 3 DBE firms that were awarded prime contracts. 5 contracts were awarded to Hispanic American firms for $2.1 million, 4 contracts to Asian Pacific Americans for $2.3 million, and 10 contracts to Black American firms for almost $600,000. In terms of some of the things that we will continue to work on and improve, our mentor protege programs, which has yielded success, successful partnerships and relationships between longer established firms and certified small businesses, project meet and greets and individual meet and greets with council decision makers. And then we use the Thrive Equity Funds for our MCUP supportive services for certified small businesses. Although these are directed at MCUP firms, a lot of our MCUP firms are DBE firms as well. They're just located and based in Minnesota. But here's some of the classes. The how to bid and estimate responding to an RFP continue to be the most popular courses in terms of what is offered. OEEO continues to provide divisional trainings on the contract initiation memo and goal setting process. And with the implementation of the new federal regulations, post-award to end of contract training as well. Our data team continues to explore better contract compliance and reporting options. And we are endorsing and promoting the adoption of a small business spend plan policy. And something to pay attention to, if you recall, we did have a small business equity audit that included some recommendations. Though staff that participated directly with the disparity study, we have seen the report. It's not going to be public until the end of June, but there are some recommendations as well that we are looking at, and we are putting together a priority list of recommendations that we feel the council should adopt for implementation. With that, I will stand for any questions.
Thank you very much, great report. Are there any questions, comments? Councilmember Barber?
Thank you, Madam Chair. I know that some of the DBE programs been mentioned through some of the various committees adjacent to some of the administration's executive orders and things like that. So we know, and I think I saw something that's working its way through the court somewhere, but obviously I assume we don't plan to change what we're doing, but you know, have we heard anything from the administration along the lines or?
Madam Chair, Councilmember Barber, I think that's an excellent question. We continue to monitor what's in the courts. There was a court case that I think some of us are familiar with, 5th District. Yes, I know it's Kentucky. I was looking to see if Ann or Patrick to see the right district. I do think it's 5th District.
Yeah.
But it's Mid-America milling case. And that did not strike down the DB program. However, what it did was it prohibited initially the states of Kentucky and Indiana, where primarily these two subcontractors operate, from establishing DBE goals on projects these firms were interested in. Later, that ruling expanded to include other states, including the great state of Minnesota. It has had impacts not to the council, but to our partner agency, MnDOT. They have had to reissue projects or addendums without DBE goals. I know Illinois as well has been impacted by this in terms of states that are close in our proximity. Although we do have no immediate plans to change, we do feel it's prudent to plan and have a contingency plan relative to if there were some Mid-America for some reason decided that it was in their interest to participate in one of our projects. We are planning for that contingency and working with our partners, Hennepin County, MnDOT, Department of Administration, Ramsey County, and others on developing requirements for a small business program, which is already a requirement of the DBE program. That said, DBE is still the law of the land, and the only two things that could change that is, of course, a court decision, which has not occurred. We are still monitoring, along with our partners in OGC, all court cases, or an act of Congress. Executive orders do not impact the DB program. But again, we are paying attention and we do not want to be caught flat-footed.
Thank you, yes.
Yeah, thank you, Madam Chair, if I felt, I'm glad to hear that keeping track of it, of course, but also having a fallback plan, like, because I think that we've done such good work. Really, I mean, clearly, I think even the numbers now, congratulations, by the way, they're good numbers. And especially that there's prime contractors involved, so that's a big deal. And so yeah, we don't wanna lose ground that we keep, so.
Thank you. Anything else? Any other questions? All right, then seeing none, thank you, Ashanti. And we will keep you up and maybe Jody will be joining you. And we'll move on to our third information item, which is our quarterly procurement and MCAP goals review. So Jody, thank you for being here. And we'll turn it over to you. You've got up to a half hour, so enjoy.
Good afternoon, Madam Chair and committee members. My name is Jody Jacoby, and I'm the Chief Procurement Officer, and I'm joined with my colleague, Ashanti Payne, Assistant Director of the Office of Equity and Equal Opportunity. And we're here today to present to you the first quarter of the year, the procurement summary. And as you'll recognize, this format was brought forward last quarter, and it really illustrates sharing stories. It has the same data as you've seen before that's still captured in the appendix. And as we walk through the report, we'll have specific information referring to that page number in the appendix. Presenting the data is important, not only to review what happened, but it gives us an opportunity to have a comprehensive look back at trends, measuring progress, and then identifying areas of improvement to continue supporting not only the work of the council, but supporting the goals of the agency and improving the region. And so again, our presentation is designed really to outline stories and the impact behind the numbers, and then show how each of these contracts contributes to the greater work at the council. This isn't just representative of work done on behalf of procurement and OEO, but really it's council-wide, especially many partners in regional administration who help support the work. This report is required as an information item per the expenditures policy 14-2, allowing the regional administrator to approve procurement awards up to $500,000 for goods and services, and then $10 million for construction projects, as long as the cost is within the adopted capital budget and within 10% of the engineer's estimates. And you have seen many of these items individually with business items if they're over that $500,000 threshold for goods and services and more than $10 million. Just like before, in the appendix, the information is grouped by procurement value and type, focusing on contracts that exceed the $175,000 threshold. That value is significant because by state statute, it outlines that those projects individually need to be formally advertised by public notice. And this is accomplished by posting the opportunities on many different pages, but specifically our doing business with the council page. So I'll begin by starting again with some highlights of the procurement summary, and then I'll hand it over to Ashanti for a deeper dive. All right, so dialing right into it, looking at the first quarter, monitoring some of the trends in the spending. This is pretty consistent quarter to quarter, and for first quarter alone, 96% of procurements had a total value less than $10,000. And in first quarter alone, there were 10,658 individual procurement events. Those can take the form of a P-card transaction, a purchase order, maybe a request for quote, lots of different contract types. And then the converse is 84% of the total spend of the procurements has a value greater than 500,000. So what this data tells us, as we've learned before, is there's a lot of opportunities, especially for our small business, our MCUP business partners in that category, less than $10,000. And one of the highlights from the first quarter is one of our programs, which is the MCUB Direct Select Procurement. We had the highest to date percentage for MCUB providers. 36% of all purchase orders or P-card events less than $10,000 were awarded to an MCUB. As you're probably aware, that program started in 2019, and it's consistently increased with the support of many different partners, lots of training, and really illustrates the commitment that we have to the program. And within the last year, we've had a training on, I think it's entitled Think MCUB First, where we have reinforced thinking about MCUBs to do the work, because that really is within a sweet spot of work that they can do. And we've had more than 72 employees attend those trainings. Invitations for bids, some of the highlights for this, and this work is where price is the sole consideration. We have a prescribed set of requirements and we hand that to the vendors. And so the vendors we're able to make that decision based on price alone. Some examples of work would be snow removal, probably not snow removal now, probably lawn care. It could be construction services, but again, where price is the sole determining factor. And in first quarter, 87.5% of the bids had an MCUB requirement was awarded to companies that made a commitment greater than the goal established. And two projects to highlight is the janitorial services contract for this building was awarded to an MCUB provider. And I believe the goal for that project was 8%. So we had a really great success here in our old building. And then another large project is we were excited to help with the Blue Line State of Good Repair 3 work, which is going to begin in August. And that project was $80 million.
And Jody, so just referencing the slides that you have here, 25, 26, and 30 in our presentation here. So when the slide are you talking about those two wins as it relates to the MCUB?
Yeah. Madam Chair, let me flip to that information and put my glasses on so I can see. So on, Madam Chair, council members, on page 24, at the bottom chart on the slide, the details of procurement value between 175 and 500,000 for awards based on bids. The first line, Perfection Plus, that was for janitorial services here at the council, that 100% commitment.
Okay, and I was on the wrong slide. You've got 25, 26, and 30 on the slide that you were referencing on. So I think just making sure the council can follow along, because these are really good stories. And on those slides, I was seeing zeros in the columns, so I was just trying to figure out. Now I'm with you. So, yeah. Okay, thank you.
Madam Chair, council members, thank you for that clarification. Moving on to requests for proposals, and that's where we're asking the vendor to help us either solve a problem, perform some consulting services, and there are a lot of different qualifiers that we make a decision on. Price isn't the only determining factor. And for first quarter, 50% of the requests for proposals had an MCUB requirement that exceeded the goal that was set. Two notable contracts in the first quarter was the Homeless Action Team contract was awarded to Mental Health Minnesota, and then also the expansion of the Metro Mobility with Demand Services, adding 2 new providers for 3 options of service providers for customers.
And are these on slides 25, 26, and we don't have a 31?
Madam Chair,
Yeah,
which one is
page
looking?
Yeah, the page numbering, so like the number on the bottom where it says 30 is actually 31. So they're-
Oh, okay.
It's
And
just
are these the right slides? And Councilmember Lilligren, did you have something while we're checking it?
No, so I'm just wanting to make sure I'm right, because you're referencing the slide numbers.
The
correct? Not
appendix,
the-
yeah,
Okay,
yes,
that's all.
okay, thank you.
I thought I was missing something.
Well, there is some, we're off a little here and there, but it's okay. Great stories. I'm just trying to match to what your data on the appendix slides are. So it's good. Let's keep going.
Excellent. The next slide we want to talk about a little bit more, and we talked about this earlier today. Paul Colton was here and we had a joint powers agreement where we're recognizing that cooperatives are playing a larger part in some of the procurement tools that we can utilize to help get our customers what they need at a quicker pace, and also leveraging some buying power of the industry. And in this last quarter, we highlighted a strategy that, again, for cooperatives that can generate a reduction in lead times and then also indicate some high cost savings. The National Cooperative Procurement Partners has estimated that on average, the cost savings for projects is around $17,400. And really, it's about that work that goes into it at the beginning, leveraging a lot of the different administrative costs that are borne by the agency when we're procuring some of these projects. This slide shows on the left-hand side, it's a bid or a request for proposal, what the procurement process could look like, depending on a lot of the different parameters and qualifiers and the unique identifiers. And then on the left side, it shows what the path can be for a cooperative procurement. And while it's not always the best tool for every project, it's a tool that we look at in procurement in cooperation with our partners to determine what's the best value depending on what the project is, what the market's offering, what are some of the considerations, how can we get to contract award that makes the best decision on behalf of the enterprise. And some of the really unique and benefits that we're experiencing right now, and again, you saw that today with the business item for the cooperative with North Dakota, is buying those vehicles now. If we went out for cooperative procurement, it would have been likely that we would have had to pay tariffs. And so it's really unique factors based on every situation, but it's a tool that helps us make better decisions on behalf of the agency. And this chart just illustrates some of the time and cost savings, again, that we're able to leverage depending on what the project is and what the value is. Another specific cooperative contract that really has been not only an administrative and a cost time savings to the council, but really a great value, especially as we're moving into a really uncertain time with pricing and tariffs. We buy many of our rolling stock, our light rail vehicles, our buses, our electric infrastructure off of a cooperative with the Washington Department of Enterprise Services. It's actually one of the only federally compliant procurements. And they have language in there that only allows their vendors or their suppliers to do a one-time increase. And that's regardless if there's one-time increase a year to their costs, regardless if there's tariffs or any other market changes. And that ability to join a cooperative that's nationally leveraged to be able to have that time savings with the vendors and be able to quantify our price has really been helpful to the council. More tariff talk, as Mark mentioned. We are experiencing a number of different scenarios in procurement and looking at each and every contract and each and every purchase order. When do tariffs apply? When do they not apply? We're currently working with finance and other partners to create some fact sheets for internal project managers to understand what a tariff is, why do they matter, what are some of the considerations, and when a vendor is looking to charge us a tariff, what documentation do they need to submit to quantify it, to justify it. We are working with finance and our partners in IS to have a line item in our purchase orders to be able to track it so we know what we're spending, and we're able to provide a lot of different resources. As you are aware, and you've heard a few times today, this is constantly evolving and it's a tax, and sometimes we just need more information before we can just process it. So that's something procurement is working on right now, is making sure that our customers have, our project managers at the council understand what's needed. And then we'll also be following up to create some documentation for our vendors. So when a tariff does apply, they understand what needs to be submitted to quantify it. So now I'll turn it over to Ashanti to talk about the specific MCA participation for the first quarter.
Thank you. I will be referencing the detail on the summary report here. And I'm going to present our MCA outcomes for Q1 2025. So this is just kind of a recap on what we measure, how we measure success through commitments and payments. I think one of the important things to remember about commitments is that this data set is all of those projects on those appendices slides as Jody's references that do not have federal funds. So it's all of those projects on 24 through 30 that don't have federal funds, and it may include one or two projects because we also report any on any construction and contracted services project that is below that 175,000 threshold. But there aren't very many construction projects or contracted services projects that fall below there. And as I said, it's one or two per quarter. But that's the data set that we're talking about. This is really just for reference. You'll see throughout the slides I'll be talking about what's included and excluded in terms of some of our expenditures. Some of these probably might be obvious to you, some of them maybe not. You might have said, oh, that we exclude that? Yes, so this is kind of that list. And the first commitment data. So as you see on page 1 of the report,
And just so everybody knows, the report is the link in the agenda item below the presentation. So if you have one monitor in front of you, it's a little tricky. For those of us that have two, we could go back and forth, but I'm willing to share over here if you guys want to follow along.
No,
You're
the
going back
tab's
and
all
forth.
over.
Okay, great. Thank you. Councilmember Barber, thank you.
Thank you, Madam Chair. A
Thank
quick question. And so when we talk about things that are excluded, like when we talk about some of these cooperative agreements, there's a different mechanism that's not called DV, but it's built into it, but I'm forgetting the acronym. So is that like not part of this, but because it's not info, but I think it's important that people know there is an element of DVE within those contracts.
so the cooperative agreements or purchases done through a cooperative agreement is included in this data set.
Okay.
But there aren't any MCUB goals associated with those projects. Metropolitan Council Underutilized Business Program.
Madam Chair, Councilmember Barber, you are correct. We have two specific procurements, or cooperative procurement ventures in the state of Texas. And they have programs similar to Minnesota, but they're called hubs, historically underutilized businesses. And it's my understanding if there's a historically underutilized business or some other program that is not represented in this report with reflection on the cooperatives.
Thank you, I just bring it up because I know this comes up at Transportation Committee often, so I don't think it hurts to kind of the audience, so I'll let you get back to it.
Yes,
Thank
and an added note to a question you asked during the federal presentation. Texas's hub program is currently enjoined, so they are not utilizing hubs at this point. They are being sued. But if you look on page 1 of this report, you'll see that the council as a whole, we did not meet our 14% goal for commitments on construction and contracted services. In terms of demographics, only Asian Pacific firms and Caucasian women participated, that's on page 2. And none of the 5 divisions met the 14% goal in Q1 2025. What I will point to and what Jody was referencing, which is on page 1 of the report, if you see that green bar, that's what it would take to meet the goal that was established on projects. And the red bar and the amount and the sum of the commitments does exceed what the goals that were established for the 5 projects that had goals this quarter. So MCUB participation as a whole, and I'm referencing page 3, has been trending up since 2020. We had a slight dip in 2023, and 2022 represented our highest achievement to date. A lot of times in both the federal report and this MCUB report, you'll hear me reference 2022 and 2023. Those are some of our highest participation in a lot of these categories, both commitments and spend. Why I'm saying that's significant is with the state disparity study, that study looked at projects from 2016 through 2023. And also, if you look on page 3, you can see that consistently that red bar, like Jody referenced, has exceeded what we've set a goal on. So our actual commitments have consistently exceeded what we established goals on. So the obvious question is, okay, well, why are we only at 4%? Why didn't we achieve? I think the answer is multifaceted, but I think it's centered around 2 key factors. One, in Q1 2025, the Office of Equity and Equal Opportunity only reviewed and established MCUB goals on 5 projects in that data set. And then the one project that had a prime award was a project that we did review and we set a goal on it, and it was a low dollar value. I think what it demonstrates, well, one of the things that we knew from the study that was done by the University of Minnesota, also the small business equity audit conducted by Strong and Starlight, and now once the disparity study becomes public, is that we do a very good job in terms of the administration of our small business programs and the achievement and outcomes that we get through there. And both the University of Minnesota, well, all 3 noted the excellent work that's going on and by the staff in our small business unit. I think the problem is, though, our small business program outcomes represent the bulk of our participation and outcomes relative to certified small businesses. So this is as close as I would want to see and get to if we didn't have a small business program, if we didn't operate a small business program. This is as close as what we would see, and look, our numbers would be even lower. But what I will say is, it is nice to receive that acknowledgement from those external parties. But if I could, I would just take a moment, 2 weeks removed from the council's appreciation week, to publicly express my appreciation and acknowledgement of the work of the Office of Equity and Equal Opportunity Small Business Unit and the manager, Megan Solberg, and the Light Rail Transit Unit, Small Business Unit. Moving on to our payment data. P-card payments. And this is on page 3 of the report, starting on page 3. We achieved 3.4% MCUB participation with P-card payments in Q1. Regional administration was the one division that met the goal, actually exceeded the goal. Regional administration achieved 13.6% P-card spend Q1 2025. We are trending down over the past 2 years compared to previous years in our P-cards, and I'm referencing page 4 of the report. And again, 2023 shows up, which saw our highest P-card spend at 5.6%. In terms of total payments, and I'm on page 5, we have payment distribution to MCUBs across all racial and gender categories, and our highest amount of spend was in goods and services. Also on page 5, in terms of direct payments to construction contractors. Again, this is representative of payments where we have a direct relationship where an MCUB is prime. In Q1, we made $160,872 direct payments to MCUBs on firms. 2022 shows up again, which represents the highest amount of direct payments made to MCUBs on construction projects, which was just over $1 million. In terms of what Q1 means, I would say it's a good start because that's more than half of what we'd had the whole year of 2024. We are moving on to.
Yes.
Yeah,
Councilmember
thanks. I'm
Logan.
sorry to interrupt your flow here, but just looking at this and at the P-card percentage has been decreasing, right, annually. And I get where maybe first quarter 2025 there's some optimism, but still the lowest, isn't it, first quarter of any year of the last 4 years. And I'm just the mechanics of this, I'm trying to kind of understand, and I don't want to get too deep into operations or anything, but these kinds of expenditures, the P-card ones, are they really sort of at the control of the individual, right? These are some of our more, I don't know what the right word is, discretionary. And if many employees can make this decision spontaneously as they're making these purchases, right? And so again, without going too deep into operations or anything, what are our plans to incentivize, encourage, that at the point of that purchase, that person feels empowered to purchase through an MCUB?
Chair Johnson, Councilmember Lilligren, I think that's the key question. And I guess the way to answer that, and if you look at even our Q1 commitment data, we don't really have good plans around those projects and procurements that are not competitively bid or subject to review or MCUB goal. And we need to have plans around those because that's when you see stuff, numbers fluctuate or dip.
Sure.
Because there isn't planning around those areas.
Okay, cool. So Madam Chair and Ashanti, so that's an area that we've identified that we need to do something. I assume that means we're gonna do something, right?
Yes.
We need,
So,
we
yes.
identify we need a
Plan.
plan.
Yes, so.
And is there a mandate in a plan? Like, you
So
know,
we have,
M-Cup first, or, you know, at least get it in your top tier thinking, or,
Right.
you know, easy to access list or something, I don't know, I'm oversimplifying it certainly, but.
Chair Johnson, council members, yes, we have put together a plan. And we also have some outstanding departments within the council that are doing well that we can say, what are you doing? A good example would be engineering facilities in Metro Transit. They are consistently at 20% and above in terms of their P-card spend. When you look at the data, they have a high level of prime awards to MCUBs and DVE firms. So we have put together a plan and taken away those best practices, with what we've learned from the small business equity assessment, the disparity study, and our regional administrator has committed to helping us on 5 key priorities that we've identified in that plan and moving it across the finish line. So yes, we do have a plan. We have noted this as a gap for a while, and hopefully we are going to arrive there soon.
Great, thank you.
Thank you,
Madam
Councilmember Liljegren, Councilmember Pacheco.
Chair members, I went through that P-card training like, 3 years ago, or whatever it was there. It's been a while, but I don't recall, and maybe it's because it's old, I don't recall us emphasizing or putting some emphasis around using M-Cups as you use the cards. And do you have it separate, or was that part of the training that I did see?
Well, I would say that procurement and the OEO have updated that. We're now partnering on that training, which 3 years ago we were not. So that training has been updated and changed.
I have to go back now?
You have to go back.
That's great, and it'll be interesting, once you get that implemented and people start to adapt and adopt that into their behaviors, spending behaviors, it'll be interesting to see what impacts it'll have, so thank you.
Yes, we're continuing to see success in our supplier diversity efforts. And I'm on to page 6. Again, we did not have any supplier diversity initiatives or activities in 2020. And we are at 3. I think in this region, for sure, we are unique in that area in terms of public entities and supplier diversity. It includes, the newest one is with Fastenal. And in Q1 of 2025, we had direct spend, Jody noted this out, direct spend 36%, highest quarter dating back to Q1 2019. And then we also like to definitely highlight opportunities to MCOs that come through cooperative purchasing. And which does, when we use our state cooperative agreement, there are MCUBs on that. And so we like to definitely point out those successes when they happen. In terms, I talked about this previously. We were awarded Thrive Equity Funds, and we utilized those to put together a supportive services program for certified small businesses. Q1 2025, 63 firms took advantage of this, and I'm on page 6. Took advantage of the training and support services. How to Bid and Estimate continues to be our most popular course. And I would say all small businesses, if you look at that chart, that registered for the one-on-one business consultation, attended those sessions. So we know that they're finding value in those sessions. We continue to get good feedback on this program. And through our quality control process, we have identified additional trainings and services that we are offering now in 2025. With that, pause for any questions.
Thank you, Councilmember Osmond and then Liljegren.
Yeah, thank you, Madam Chair. Can you talk about a little bit about the the Minnesota small businesses base that has opportunity to do businesses with their other states that cooperate with us, how they can benefit. Are they going to contact it directly or through the West agency?
Chair Johnson, council member, I want to make sure I understand your question. You're talking about Minnesota-based MCUBs.
Yep.
In terms of their opportunity to participate in cooperative agreements and purchases such as in Texas and Washington. There aren't any MCUBs on those lists, and there's no incentive for them to participate on those lists. Unless you are a big player, it doesn't monetarily make sense for you to hope that you might get an opportunity, and they're gonna prioritize, like we would prioritize in our programs, in our state statutes, we prioritize businesses based in Minnesota. Those cooperative agreements are gonna prioritize those hub firms that are based in Texas and in Washington.
Okay, so I guess I misunderstood the slide saying that also the Minnesota-based small business has an opportunity to do business.
Sorry about that, if I didn't explain that well. We have a state cooperative agreement, a Minnesota state cooperative agreement that we utilize as well. We do have MCUBs on that list, and on that page, I think it's page 5 of the report,
Yeah.
we highlight the success. We like to highlight the success when we utilize our state cooperative agreement and we have success in contracting with MCUBs. We like to highlight that and call that out because we feel that that's a good use of that opportunity.
Thank you, thank you.
Thank you. Councilmember Willigan.
Yeah, Madam Chair, just in light of time, I'll just make an observation, but I think the statistics, the difference between those who registered for training and those who participated, and that just catches my eye because it's significant, and I was gonna ask some questions around that, but I'm just guessing that you're learning since 100% who registered attended the one-on-one business, there's something there, right, that people respond to, and so yeah, in light of the time, I don't need to ask a bunch of questions or something, but
Yeah.
I just found the drop-off rate notable.
Yeah. And circle back to me, I don't know if people wanted to say how come you didn't come. In my world, we charge a little bit of money, because usually if there's a little skin in the game, they come. And you can always reimburse them after they've done the course, but that's a lot of, management there too, but.
Yes, Chair Johnson, Councilmember Littleton. That is the one reason why we pay attention to those performance
Sure.
metrics, to see, okay, you registered, did you actually attend? Because we wanna understand,
Right.
and sometimes it's because, business owners are
Busy.
the accountant, they're the
No,
salesperson, they're doing a lot of things, and sometimes they can't make the courses. But we want to understand why that is, and we want to measure it. That's why we include that in there for context. Yep.
thank you.
That's not unlike, I don't know about your world and chamber world, but we really work hard on our numbers too for business people that are attending our events. And it could be anything that hits their day and blows up their calendar. And so we try to always have a lot of grace for that, but then try to figure out, how to still get them what they're looking for. It's a challenge sometimes.
Yes. Sometimes you make adjustments to how you deliver services based on the feedback and information you get as well. So it's important information and important information to understand.
Great. All right, we've come to time. Is there anything else that's pressing right now? Jim can certainly follow up after the meeting if there are any more individual questions. So thank you to both of you for this
Thank
report. We
you.
really appreciate your hard work. And with no other items to come before this committee, meeting is adjourned. Thank you.